Guys, there's some news out there now about YieldMax declaring a possible reverse split on 12 of their ETFs. Stick around and we're going to go over those and also see which ones are on that list and what does that mean for those going forward. Hello my friends, this is Legend. So we got some news here about YieldMax declaring a reverse split. Now this is a post on Reddit, okay? I have not seen it posted anywhere else except here. Now they do have the links here of those notifications, but like I said, this is the only place that I've actually seen it posted. But I wanted to go ahead and get it out to everybody, because this could change how we are going to go forward with YieldMax ETFs, especially the ones on the reverse split chopping block. Now there are a total of 12 ETFs, as you can see right here. There are 12 ETFs that are on this list, and they've got them all listed here along with those notifications. And each one will open up and see which ones are actually being listed as that reverse split. Then we'll also make sure that you understand what a reverse split does for your position and your overall investment amounts. So let's just take this first one right here. And this one is for the YieldMax Ultra Option Income Strategy. So this one here is for ULTY. And as you can see right here, calls out Income Strategy ETF ULTY. As you can see, they are going to be doing a reverse split, a 1 for 10. And what that means is for every 10 shares you have, you'll have 1 share. So your number of shares you have will be divided by 10. And we'll dive a little bit deeper into that understanding. But as you can see here, at the top, that it has been approved for a reverse split for the issued and outstanding shares of YieldMax Ultra Income Strategy ETF. After the close of the trading on November 28th, the effective date, the fund will effect a reverse split of its issued and outstanding shares. Okay, so for ULTY, looks like on November 28th, they will be doing a reverse split. And as I said, that means basically the number of shares you have will be divided by 10. Okay. Now, what also happens is the price of the shares multiplies by 10. Okay. So therefore, your investment value does not change. And they've got a little bit of an example right here on this sheet as well. So before the reverse split, you may have 1,000 shares and the NAV being at $10 for this example, your value of investment is $10,000. That's $10 times the 1,000 shares equals a total amount you have invested of $10,000. Then after reverse split, in this case being a 1 for 10, and that's 1 share for every 10 shares you have. Okay, and that's how it's kind of read. 1 share for every 10 shares you have. Therefore, it's divided by 10. So the number of shares you would own after reverse split would be 1,000 divided by 10 is 100 shares. Now, the price will go from $10 to $100. Now again, this is just the example, okay? You can plug in whatever values you have and the math will still work out. This is an example. But as you can see, that $100 times 100 shares is still $10,000. So your amount invested does not change. So the account value does not change. It is somewhat of what you hear a lot of people speak of it as a cosmetic change. And I guess you could look at it that way. Because the value of your investment does not change, it is somewhat of a cosmetic move, right? It is a way that they can increase that NAV value to make it more attractive looking for other investors, right? But that also gives it plenty of room to come back down, right? So there's the flip side to that. As another example here, and I've got something similar to what they had on that sheet. The only difference is I also threw in the distributions, okay? Just to show you what happens with that. So for ULTY, before the reverse split, say you have 500 shares, okay? And we'll just say that the price of it is at $4 per share. So you have total invested of $2,000. And the distribution being 6 cents, your total distribution earned would be 30 bucks, because that is 6 cents times the number of shares you have of 500 shares. And if you multiply those, you will get $30. So that's where you would get that 30 bucks for the distributions. But after the reverse split, let's see, does anything change? And here we go. After reverse split, and this is for a 1 for 10, okay? So the number of shares would be 500 shares divided by 10 is 50 shares. So before you may have had 500 shares, but now you'll have 50 shares, okay? The price of the stock before was $4. Now it's multiplied by 10, right, to be 40 bucks. So the price is multiplied by 10, but your share count is divided by 10. So therefore they cancel out, and therefore your total invested is the same amount. In both cases, it is $2,000 total invested. The distributions before the split, we'll say is 6 cents. And after the split, it's not guaranteed, but if you're comparing apples to apples, then that should be around 60 cents. So that would be 10 times what the distribution was before. So how much are you earning in distributions now? Well, you're still earning just $30, the same as you were before. Yes, you are earning 10 times on that distribution, but you own 10 times less, right, than you had before. So your shares were divided by 10 and your distribution was multiplied by 10. So therefore, again, that cancels out. So your total distributions would be the same. So they do not increase. And that is why a lot of people look at this as a cosmetic change, because you're not making anything and you're not losing anything in the total invested amount. And you're also not making any additional money in the distribution. So in a way, it's somewhat of a wash. But, and this is the big but to it, and the reason I do not care for these reverse splits, and that is right now, ULTY being $4. Now that's not great, right? We don't like this NAV erosion. No one does. No one likes to see the price come down. But popping it back up to 40 bucks, and even though I didn't lose any money by this happening, but now it's at $40. And what happens as this drops? Okay, well, as this drops, I only have 50 shares, right? So as that price drops, the distribution also will come down with it. As you've seen, there is a tight correlation between the two. Okay, and that's in general. That is not guaranteed, but in general, if the price of the share comes down, so does the distribution. Because as you can see, at $4, we're at 6 cents. At 40 bucks, we should be closer to 60 cents. Okay, but if this ever came back down to $4, you'd be back down to 6 cents. In theory, again, this is all just talk. But what's the difference here? Well, if it's down to 6 cents, you don't have 500 shares. You have 50 shares. So instead of 30 bucks, you're now looking at $3 in distributions, right? So it has more room to come down. You have lost a good portion of your shares. And if there's ever another split, and we're going to say that this one here, we have 50 shares at 40 bucks, but we're going to say that $40 has went down to that $4 again, okay? And we're going to take a lot of assumptions here, okay? This is a lot of assumptions. That $40 going down to 4, and we're going to assume that distribution follows suit, all right? 60 cents down to 6 cents. And I've changed the number of shares to 50 right here because I want to show that price from 40 down to $4, right? So we're going to say this dropped down to $4. So now our value of our stock went from $2,000 down to $200. That's the value of that position, all right? Because that $40 has went down to $4 again. And we still have that 50 shares. But the fact that it's went 40 down to 4, now that total investment amount or the market price, right, of all your shares is now only worth $200. And that distribution, we're going to, again, take a big assumption here and say that $4 up here had a distribution of 6 cents. We're going to follow that right through here and say that would be 6 cents, and that's $3, okay? Now, we're going to say that now it's back down to that 4, and we're going to do a second reverse split, okay? And I'm doing RS as for reverse split. Okay, so there we go. I've got another couple rows in here, and this is going to be the second reverse split. This one here was just the price coming down, right? From 40 down to $4. And our total invested value now is only worth $200. If it does another 1 for 10 split, then our number of shares would be this 50 divided by the 10 again. And now we're down to 5 shares. Well, that price here is going to be multiplied by 10, right? So we're back to $4 times that 10 again, and we're back up to $40. So therefore, you can see there's that 200 and 200. So no change again in that amount at the time of that reverse split, okay? No change there. And the distribution would also be multiplied by 10. So that'd be that 6 cents times 10, and that's that 60 cents. So you're still only earning that $3 now, right? Because you had that drop right here, right? From that $40 down to $4, there's the drop in your distribution. Now you do a reverse split and you see that quote again, just cosmetic, right? Right here, just a cosmetic change because that total amount that it's worth is still $200. And the total distributions you're earning is still $3, right? But you took the hit from that $40 coming all the way back down to $4. Now what happens as that $40 drops down to $4 again, right? Over time. All right, so how many shares do we have? And I've just drawn in this yet another couple rows here. So we still have our 5 shares, but that $40 has gone down to that $4 again, okay? Now it's only worth $20. And you can see you're just eating away at how much you actually have in that position, okay? It's just eating away at it. And you can see why I do not like reverse splits. And of course, apples to apples, we're going to assume that that is now back down to that 6 cents. And you're earning now a distribution of 30 cents. Okay? Well, it's back down to the $4. What happens? We'll say that they do the third reverse split. Now, I know I'm taking this out a little far, but I just want to show you what's happening to your overall position. All right, so now I'm showing that third reverse split, okay? So you had 5 shares at $4. It's only worth $20 total. And your distribution is back down to that 6 cents and you're earning 30 cents. Now, what happens off of a 1 for 10, yet again, for the third time? So let me show you what happens here. And this is when you're done. Because when I take that 5 shares and I divide that by the 10, because it has to be cut by 10, well, what happens? It's only half of a share. And I will say, for any reverse split I've ever been in, it will only reverse split and you'll only carry those whole shares. Any partial shares will just get paid out in value to your account. So since you only have half of a share left now remember, you started off with 500 shares and then you did the reverse split and you had 50 and the 50 went down in price. And then they did a reverse split, 1 for 10 yet again, and that takes you down to 5 shares. But the price increased by 10, so now it's 40. But then that drops, you still have your 5 shares, but the price drops to $4. And then they do a third reverse split, and now you have half of a share. Well, from what I've seen before, all partial shares will be paid out. So what will happen is you will no longer have any shares in this position. That 0.5 shares will just get paid out at whatever that price is. And that price, we're going to say that it was that 4 again, and that gets multiplied by that 10 times. So it's $40. So the total invested or the total value of your position is still $20. The distribution would be multiplied by 10. So that'd be at 0.6 again times the 10. So you're back up to 60 cents. And there's that same 30 cents because, again, this is just, quote, cosmetic. Okay? But there's the problem right there. You're at half of a share. And like I've said before, I've been through a reverse split before and any partial shares just gets paid out. So at that point, if that share price is $40, they will drop $20 into your account and you will no longer have any of ULTY left invested in your account. All your shares will be gone and you'll earn that $20 into your account and therefore the end, right? And that's why I don't like reverse splits. It is eating away at your share count and eventually it can remove you from the position altogether. As you can see here, just off of 3 reverse splits, and that's a lot, right? I know, that is a lot. And that is also assuming you're not reinvesting. But my goodness, if you are, I'm not sure that is benefiting you much at all, right? But after that third reverse split, only having half of a share, it won't carry into your account from what I've seen before. They will just pay you out the value of it, and the value of it would be the price per share being $40 times 0.5, and that gives you your $20. And of course, the distribution doesn't matter because you no longer have any shares. Now, you can buy partial shares, but on a reverse split, as far as I know, they will not do that. It normally has to be a whole share. So if you have 10 shares and it's a 1 for 10, then you will end up with 1 share at the end. But after that, if there's another reverse split, you only get just the payout. They're not going to give you a 0.1 share. They're just going to pay you out the value of it and it's over. So I wanted to spend a little bit of time on what the impact is on these reverse splits and why I do not like them. And this was just for ULTY here. And that's the only one I've actually called out so far, right? So let's just go back to the sheets and let's just see which other ones are going to also go through this reverse split. All right, we're back on that sheet here. And as I said, there's ULTY. We know that one, and we've went through an example on that. And that example will fit for all of these, right? And whether it's a 1 for 10, or in some cases, you can see they're not all 1 for 10. Some is 1 for 5, okay? So for every 5 shares, you'll get 1 share. So you can read it as such: 1 share for 5 shares, or 1 share for 10 shares. So that's how it's read. But as you can see on that second one, it will contain crash, dips, and FIAT. All 3 of those will be going through a reverse split, and the date for these will be effective on December the 1st. So the dates are not the same for all of these. The one before, it was November 28th for ULTY. But for dips, crash, and FIAT, it's December 1st. I mean, it really kind of doesn't matter much, right? It still looks like it's happening. And they give you the same example here to show you that the value of your investment is not changing, right? It's just a cosmetic thing. But you saw in my example how that quote cosmetic deal can really wreck your account. So that's 3 more there. And then we have the Bitcoin option play, and that is for YBIT. Okay, so YBIT is going to be going through a 1 for 5. So that's 1 share for every 5 shares you have. And the date for that one is also November 28th. And the next one will be for MARNI, Tesla again, right? Tesla's already been through 1 reverse split. This will be a second reverse split for Tesla. Now correct me if I'm wrong, but I think the first one was 1 for 2, but I could be wrong on that. So you can definitely correct me in the comments if that was incorrect, but I believe it was a 1 for 2. Well, this time it's a 1 for 5 for Tesla. Now look at MARNI. MARNI is actually a 1 for 10. So this one actually is combined with a couple different ratios here. As you can see, MARNI will be 1 for 10, but Tesla is a 1 for 5, and XYZY is a 1 for 5. And they're nice enough to show you that, you know, your total investment here is still going to stay the same no matter what, because it's just a quote cosmetic change into the account. This is the example of the 1 for 10, and this is the example for 1 for 5. So you'll receive 1 share for every 5 shares you have. Okay, so if you had 1,000 shares, that divided by 5 would be 200 shares. That would be the case for Tesla and XYZY. If the price was $10, it's multiplied by 5, it would be $50. And when you multiply 200 times 50, you're still going to get $10,000, and you had $10,000, so it doesn't change your account, right? Right? It doesn't change it at the time of that reverse split. But again, you can scroll back and see my example of what can happen as these reverse splits continue on. Or even if you don't continue on, it still gives room for that price of that stock to come down. Because like in my example, where I had it at $40, it was 4 and it went to 40 right after the reverse split. But now it can come from 40 all the way back down to 4. And you have to also understand that does and will affect your distribution payout. Because if it went from 6 cents to 60 cents after the reverse split, as that price drops, it will go from 60 cents back down to something around that 6 cents again, right? It is in correlation with that price. And that's the reason I've always said I do care about the price, right? I know a lot of people say, I don't care about the price, I just want the distribution. But you have to care about the price because the price does help to dictate what that distribution is going to be. But anyway, so they do give you that example for that 1 to 10 here and for the 1 to 5 here, you know, for those cosmetic changes. And another one here is for ABNY, AIYY, and CONY. Oh, man, CONY. Come on. So ABNY, which is for Airbnb, right? And that's going to be a 1 for 5. And the other two, the AIYY and CONY, are both going to be a 1 for 10. Okay? So same situation as before. Same possible issue that could be coming, right? As if that price continues to drop, so would those distributions. And the last one here is for OARC, okay? And OARC is going to be doing a 1 for 5. So as you can see, not all of them are a 1 for 10. Some are 1 for 5, but they all still have that issue of after that reverse split. It's not so much of the reverse split is the problem, right? That's not so much of the problem, because yes, it doesn't change the value. It doesn't change how much you're making and distributions. The problem is the difference between after that reverse split to some point in time. As that price drops, so does your distribution, and therefore so does the distributions that you're actually making, right? That's where the problem becomes. And then if the reverse split is going to be more common, then that $4 is going to have to go through yet another reverse split to continue on, right? And that'll jump it to 40. And yes, that is just that cosmetic change. But again, like I said, that price, if it cannot hold and it continues to drop yet again, and that's where the problem lies, right? So that is my problem and my issue with reverse splits. And I went through I went through 3 reverse splits with Defiance funds. So it's not just YieldMax, right? Defiance had the same issue. And they had a reverse split, and I went from 1,500 shares, and after a 1 for 3, it dropped my 1,500 shares down to 500 shares, right? And yes, that was nice to see that distribution jump up, right? From that low distribution up to another nice juicy distribution amount. But I had a third of the shares for the ones I had with Defiance, and therefore my distributions that I was actually earning doesn't change, right? It doesn't change, because if you're multiplying one, you're dividing the other, you end up with the same dollar value. And as I've said from the very beginning, I do not like reverse splits. And now I'm having to really think about what I'm going to do going forward with ULTY, because after reverse split is not usually looked as a very positive thing. Okay, reverse splits are never really positive. And a lot of people will try to tell you, but this is different. These funds are more income plays, right? You're earning those distributions. But as that price, yes, jumps by whatever that multiple is, it then can come right on down again, right? And that's where the problem is. Again, it's not so much of that reverse split. That moment in time doesn't change your account at all. It just opens you up for more risk of a decline in the price per share, and therefore dropping the amount of distributions you're earning, because your share count is also been divided by that same multiple. So I do have some thinking to do, because now we're looking at my spreadsheet right here, and all of the ones that I have, the only 2 that are being affected by this reverse split is CONY and ULTY. And both of those I'm currently down on. I'm not down much, but I am down. And I have not updated these sheets yet, so it does not show my new purchases, nor does it show that new distribution we have. So that will adjust these, but they will still be red. So they will still be at a slight loss. But in my case, for CONY, I have 500 shares. A 1 for 10 means I will end up with 50 shares. For ULTY, I have 200 shares. Again, none of this is counting the ones I've already purchased, right? That will increase this number. But just looking at this number here, 200 shares, that will take it down to 20 shares, right? So, ouch. Not too happy about that. So currently, if I were to sell out of ULTY at the current price, and this was the current price on Friday, right? I would lose $95, okay? Now, I have a total of about $1,000 of my capital invested, but if I were to sell, I'm going to lose $95. Not a real big amount, right? Because I have been trying to continue to lower my real price per share. And that's the reason why I'm taking such a smaller loss, because I have been working to lower that real price per share. And same with CONY. Now CONY, I've got about 4,500 invested, but if I were to sell out at the current price as of Friday, I will lose $529. Now that is a bit more, right? But it's still only a small portion of what I have invested. And to just do a quick little percentage, I am looking at a 11.5% loss on CONY, okay? So I'm not at no 50% loss, right? I have been working to continue to lower that real price per share, which in the end is going to help me because now I'm only looking at losing about 11.5% in CONY, and for ULTY, 8.7%. Because that's that $95 that I'm losing out of that $1,000. And for CONY, that $500 out of the $4,500, right? So 11% loss on CONY and 8% loss on ULTY. Now that is using the closing price on Friday. So if that price drops next week, then of course this percentage will increase, right? Because the amount here, that $529 and the $95 will increase because the price will have dropped, if that makes sense. So again, more of a reason why using my method, when something bad happens, at least I'm not going to lose 50% of that position, right? Everything else I'm up in except SMCY. And I'm still working to get this down. But SMCY, as you can see, is at $10.31 for Friday, and I'm at $11.83. So that loss for that one, if I want to do this here, you can see I'm at about 10% loss on SMCY. But now everything else I'm actually up on, right? If I were to sell, I would be up on those. See, for PLTY, I'm up 78%. So very nice, right? I am not at a loss on PLTY because I will have made $1,700 if I were to sell at the current price. Same thing for NVDY. I'll make $144 on that one. MSTY, I'll make $3,800. AMDY, I make $1,600. Now that is completely selling out of that position. SMCY, I will lose $45. I can continue to scroll over and just show you how my method is protecting me if something like this happens, rather than continually to put it all back in and now you're at 100% risk. I'm continually to lower my risk on these high yield ETFs. YMAX, I'll make $1,600. Now BIGY and SOXY I've already sold, and XDTE I sold, and those will get updated, as I said, when I update my sheets this weekend. QDTE, I'll make $981. And I'm looking at this green row right here, okay? And I'm looking at that row right there, and that is telling me how much I would get or lose if I were to sell at that current price. IWMY, I will make $1,800. Now, IWMY, QQQY, and WDTE, all three of these right here are the ones that I was talking about that I went through a reverse split. I had over 1,500 shares each of these, okay? And they did a reverse split on those, and it was a 1-for-3, okay? But as you can see, if I do sell them at the current price, I will make money. So it is not meaning that this is a doomsday. This does not mean that it is over when you do a reverse split. I'm just telling you, I don't like them because my ultimate goal is to get them paid off. And as you can see, for IWMY, it's 87 more distributions before I get it paid off. That's over 1.5 years, right? QQQY and WDTE, 38 more distributions. So that's under 1 year at least, right? Maybe around about 3/4, something like that, of 1 year before I'll get those paid off. But I have had these for quite a while too. So not too excited about a reverse split. And then you can see the last one here is JEPQ. Now I only have 47 shares of that one currently because I did get 100 shares called away for a sold call that I had on JEPQ, but my average real price per share is $3.71. So I only need 9 more distributions. Now this one pays out monthly, so that's 9 more months. And at that point, as long as everything continues and I'm earning that distribution of at least that same average that I'm using for that calculation, and that is part of my spreadsheets. If I scroll over to the spreadsheet for JEPQ right here, you'll see it's utilizing an average distribution of about 45 cents and saying that it'll take 9 distributions before it gets paid off. And since it is monthly, like I said, that would be 9 months. And that 45-cent average distribution, as you can see, that is pretty close to about what that average has been, right? So I feel pretty confident at the moment that JEPQ should get paid off within about 9 more months. Not guaranteed, and it doesn't even mean that I will be keeping it. So this one here, because I lost those 100 shares, as you know in my previous video, that $56 call that I had did get exercised, which then called my shares away. Now that did help lower my real price per share, and it dropped it down to $3.71. So now I am looking to get it paid off in just 9 months at the current distribution average. But if I were to sell out at the current price, the amount that I'll actually earn is $2,543. And that is shown right there in that green cell. So as you can see, this summary page does pull all the information in from those other sheets. But this kind of helps you feel a little bit better about the positions that you're in. As you can see, I only have 3 that's red, and they're not down by much. The most being about 11%, because this one here I'm actually up 78%, right? So the most that I'm down is on CONY at 11.5%. So not too bad, and I may stick it out on CONY. But for ULTY, dropping it down to 20 shares, I don't know, guys. Not sure how I'm feeling about that, and may end up just selling out, taking my $100 loss, and moving on. But chances are I will probably see how it reacts after that reverse split. But as soon as I see that thing moving down, I think I'm going to go ahead and call it, right? I don't want to stick around and watch that $95 loss to become $500 loss, because then I'm looking at a 50% loss, right? So I still have some thinking to do of what I'm going to do with ULTY. But for now, I'm holding on to CONY and ULTY until I can figure out how and what I want to do. I may end up selling both of them, or I may be holding them. I'm just not sure yet. This is new news, and I've not had time to really think about it. Maybe I'll use this percentage down more of like a stop. So if it gets to 15% down on CONY, maybe that's the point that I sell and just take my loss, right? That will increase that loss a little bit, but I will actually be able to see if it can get back up above my real price per share. But like I said, I have went through a reverse split on those Defiance funds, and as you can see, I'm actually up in them. So it's not the end of the world if YieldMax can use that reverse split and then steady the NAV. But if that NAV is going to continue to drop, then I think for myself on CONY and ULTY, I might have to just pull the cord. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it does help the channel out. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.